Hello, we are live. I am Lisa J. Stocks with this week's Sunday Stock Talk episode. Welcome in. Thank you for tuning in. Please make sure to give the live a thumbs up as you come in. Um, I'm running late. I'm sorry. I'm always running late. Let's just set a little goal. So today we're going to be talking about the stock market correction, how we can protect our assets, how we can go about, making a plan that can help us to weather the storm that we are going through right now. Thank you, Eddie, for tuning in and for chatting. So let me get started. So first, I think I want to go about going over some history because what we're going through right now, we have to realize that it's happened before, and I want people to just keep that in mind, the big picture of the recovery that always has occurred when you put the work in and have certain good sound investments in your portfolio. I'm going to get further into that, but I don't want people to I'm definitely not giving you the message that there's no risk that is associated with investing, nor do I want you to think that everything that you invest into will always have, turn around and recover. That is not, that's not true. And, I've had some failing, investments that I added into my portfolio that should have never been investments. They should have been trades. But the point is, and the big picture that I like to share on my investing journey is that even with those things that happened that did not go my way, when it comes to investing, um, I think we all know this. If we work in a job, we know that this is the way of building wealth. This is the way of planning for retirement. This is the way of potentially assisting our children with going to college is by investing. This is the way that the structure that has been presented and created in order for us to build wealth. So I don't want us to be scared of it, but I want us to make sure to make the most of it in the right way in order to take advantage of what is here and the opportunity that is here. And what I was about to say is that, you know, way back when there used to be pensions at companies, but now, once they shifted to the 401k, 403b, all of these different things, this is the way that we can plan for ourselves, unless one of the biggest ways, obviously, there's real estate, there's having different types of businesses, but the way that most Americans have the opportunity that is presented to them in order to do this is by investing. Thank you, Peachy and Joe, Steve. I see a few more people have joined and are chatting. Thank you for that. All right. So first, I want to start off with what is a market correction? And they say that that's basically what we are in, or certain indices borderline to it right now. So a market correction happens when the stock market, like the S&P 500, for example, drops by at least 10% from its recent peak. Now, this is a natural part of investing, and I'm going to go back over probably the last 20, 25 years in my conversation today. But we have to know that this is a part of what goes on. Sometimes those stocks need to reset when they have kind of gone up too quickly. So, unlike a full blown crash, corrections are usually short term and can create great buying opportunities for long term investors. Now, I would say that right now we are going through something that we can't exactly look back in history to be able to reflect upon what will happen, because with the administration in and what Trump is doing with the tariffs, and it's kind of different, um, different elements to it. But there are some that we can try to look back on history in order to figure out what might come next. So thank you, Vincent, and everyone that's in the chat. Thank you, Joe, for being such a great mod and member, and greeting everyone if I happen to miss anyone out there. Um, and okay, so market correction. So on average, market correction happens every 2 years and it lasts about 4 months. But that's what we've seen in past history. They help to correct those, help to correct when some stocks are becoming overvalued. So now let's go back in history. Now, we are most likely, everyone in this chat can remember, maybe not tied to the stock market directly because maybe you weren't in that mindset of watching it. Let's go back to 2008. We had a financial crisis, and that was truly a crash. It started with the US housing bubble. Um, there was lots of mortgages that kind of went under. The banks were struggling. The Dow Jones plummeted. The S&P fell by 50% from its peak at that time. So it was truly a crash. And I want to tie this into these different years of where I was at in my financial journey in my life. And from 2000 and 2007 going into 2008, I was pregnant with one of my daughters, and I wound up having to be home for many months on bed rest and then on maternity leave afterwards. So that time period just put me in that mind space of I was just stressed out with that situation. So um and I because I was on bed rest, I was then on partial, I was on short-term disability. So I wasn't getting 100% of my pay with that. So all of these different things just put me in a place where I was actually considering. At that time, I didn't do it because my family said I don't need to and encouraged me not to. But I was going to stop contributing to like my credit union and my 401k. I was going to turn those things off while I was on bed rest because I wasn't getting my full paycheck. But I'm sharing all that to say that it seems like when certain things happen that could have been wealth building opportunities for me, I was in a place where I wasn't able to take advantage. But going forward, I'm not going to let these things hold me back from the potential to build wealth. Like right now, I know, we're all struggling. Probably most people have been impacted negatively when it comes to their budget. But at the same time, if you can in any way take advantage of the opportunities that are here, I encourage you to do it, and to do it in the best way possible. Do it with the research and the work behind it, so that obviously, my only goal here is to make money, not for anyone to lose any money from investing, making any financial choice that it's all about building wealth, not losing money. Now, you may have to go through a time where there is a pullback, where you have to wait for a recovery, but I definitely don't go about doing anything that could potentially lose me any money or lose me all of my money. Most definitely not. So that was what went on in 2008. So just think, we made it through that. And the markets were severely down, and then they came back. Back in 2020, we all went through this together, the COVID-19 crash, and the Dow was down, the S&P, the Dow was down by the most that it had been since back in 1987. So an extreme true crash occurred at that time. The S&P and Nasdaq were down over 30% in the weeks as we went into lockdown, and we were just panicked and going through something that we had never gone through in life, you know? So, but then the next in within a few years, um, thinking back to 2024 and 2023, we had such strong years when it comes to the S&P 500. All of the indices were thriving. The tech stocks were thriving. So we have to be ready for the recovery. Now, when it comes to that time period, just to share about what was going on with me, I was in a point in life where I was after my second layoff, and I was pretty much the newest person in the department in the company that I was then working for. And I wasn't there very long. I would say maybe a year or so. And so because of that, I was worried that, you know, if there is a layoff, I might be the first one to go. But it turned out I made it through. I was there working, for several years after that point. But the thing is, I was apprehensive about investing heavily because I didn't know if my job would last. And I figured I need to hold on any cash that I had. I need to hold on to it for emergencies, to be the emergency fund if I did lose my job. Now, in retrospect, I would have gone about that even differently. I know if you've been here before, I always advocate about having your emergency fund so that you don't have to run up your credit card, so that you don't have to sell your investments before you truly want to, because you have to look at them to be the emergency fund. But if I could go back, I would not have held on to the amount of cash that I did in that 2020 period, because I wound up working remotely for 100% remote for a long stretch of time, but there was never any interruption with my pay. So, um, I shouldn't have looked at it. My personal experience, and what I was going through, I think if I could go back, I wouldn't have looked at it the way that I did. I would have invested more heavily. And then if something did happen, just be willing to face selling my investments and taking on the capital gains and whatever I had to, because it was that big, it was that great of an opportunity that was there. And at the same time, in retrospect, I did not have any interruption with my pay. So I didn't need to be as conservative as I was and go as slow with my investments. But this is just my personal experience that I'm throwing into the story just to share with you guys. So, and, at that time, we also got a lot of stimulus money. The interest rates were very low, and then they came back. Now we see in recent years, they are up higher. They're up to where they were, 20 years ago. But it was just a time period. There's something that I did take advantage of during that time period. I did buy a property, which I was able to get a very low interest rate, and I refinanced other properties in order to get a lower interest rate, because even my primary home that I live in, I was at 4.9% interest rate, and I was able to get that down by about 2% at that time period. But some good, some bad. I was able to get that done, but I don't think that if I could go back, I would have done more investing, even if I only knew that I wouldn't have had any interruption with my work, then it would have been easy to do. But even if there was going to be, I should have invested heavier. So now, then, in more recent years, 2022 was unlike 2023 and 2024. That was another year when we were in a bear market where inflation was hitting, 40-year highs, things that we might not have seen. The federal government was then pushing up the rates, And then, and within that year, the S&P 500 dropped by about 19%. Um, and those Mag 7 stocks were not flourishing. But then we have to think about the recovery that came in the 2 years prior. Now it's turned around again. It's going down in 2025, but we have to, we have to realize, even if it is half of this particular administration, even if, a year, 2 years of it are in this direction, we have to think about the future. It's not always going to be this administration. This is going to be this will be the last time that he will be able to be a sitting president. And we still, well, many of us, we're not at the brink of retirement. So we have to think about our long term when it comes to our investing. So rising rates and all of these different things that we went through during that time period really can dramatically shift investors' sentiment. And I want us to have a positive outlook whenever it comes to our investing, even during the hard times, even the times when we have to hold, we have to wait, because I believe that when you put the right type of investments into your portfolio, it will recover. And it is a huge opportunity for us to build wealth. So now, what's happening so far in 2025? Let's talk about that. Over the last, we're not even a full 3 months into 2025, but yeah, we're seeing a dramatic difference than we did in those record highs that we had in the 2 prior years. Let's see, bring up VOO for an example. I'm not going to share screen because I'm on vertical this week. I'm trying to rotate that. Let's see, year to date. So the S&P 500 is down about 4%. And like I started off the live today, I was talking about a correction, a crash. We have been through these before. We may not have realized it because we may not have been looking at our investments. We might have been in a different place on our investment journey, but there are many factors, different factors that we are facing right now. Right now, the downturn, and what's driving it is Trump's tariffs, recession fears, and another thing that we can look to in order to find out what is going on with the volatility is the VIX, and that is the fear index, and it measures how much volatility on large or large price swings investors expect in the stock market over the next 30 days. And when this goes up, it signals to investors that, they feel more uncertain and they're worried about the future of their investments. And then this often happens when there is these type of financial stresses and the major news and the economy just rocking, these different things that are happening like we are going through right now. So when the VIX is high, people are preparing for big changes in the stock market prices. And so, when it comes to our investments, we want to have confidence. When it comes to the government, the administration, everything like this, we like stability, we like certainty. And when we don't have this, the market feels the same anxiety that we are feeling. And so that's what leads to, some of the volatility. But these choppy markets, these pullbacks, you have to realize where you are at in your investing journey. I don't want anyone to be overly aggressive because you have to do what's right for you. But at the same time, if you are behind in your investing, if you've had setbacks over the last years, if you maybe had to tap into your 401k and take a loan against it, or done some things that you want to now build back up from. This could be the time, so don't go about it blindly. We don't have to. I know I do use this expression, but let me try to give more clarity to it. I do sometimes say I am buying the dip, but you can't just, go after a falling knife, as they say. Um, you have to make a plan for yourself on, keep an eye on the numbers. Make a true plan. Am I going to just steadily dollar cost average? Am I going to wait every time it drops by a certain percentage? Am I going to take a look at the EMA and make my plan based on that? Set alerts. Don't just go at it without a plan, start to finish. And even more importantly, make sure that you are putting investments into your portfolio that I call myself, or I feel like I am more of a value investor, a conservative investor. Everything that I have in my portfolio, I do believe that if it goes through a struggle, if it goes through legal issues, that whatever is occurring, that it will in time bounce back. There aren't many things that I feel like I have those quality type of investments that whether it's stocks, whether it's individual stocks, ETFs, or even my crypto, I'm willing to hold and give them time to recover when we're going through particular struggles. Now, crypto, I do keep that as a smaller portion of my investments that I have. I would say I've been working to get ETFs, and then just a select few blue chip stocks to be the larger positions. Um, Curtis is asking, do I believe Apple is a buy at 212? Yes, I do. Yes, I do. Now, I did not buy much Apple stock last week. I didn't, I didn't do anything extra more than I usually do, but that's only because has been an investment that's been overly weighted in my portfolio as compared to others, even my ETFs. And that's because it's one of the first investments that I got started with about 5 years ago when I started investing on my own. So not that I have anything, I wouldn't mind having more, but there are other things that I have a priority on building up more than my Apple stock. All right, so let me take a quick station break. It seems like my Nightbot has stopped working. I don't think it's working at all anymore. I'm going to have to maybe uninstall it and try to figure out what's going on there. I'm not seeing anything coming through. Let me see. If anybody's dropped any comments, any questions or anything, I'm sorry if I missed it. I will try to take a quick look back. Thank you, Lionel, for giving the live a thumbs up. If you haven't, please do so. Let's see if we could get to 100 likes this week. Thank you, Peachy, for sharing me out and for tuning in this week. Nightbot is on spring break. Okay. Yeah, he's been gone for 2 weeks now. I don't think he was working last week either. I don't know what's going on. I work to put all my little cute things into Nightbot, and no, it's not working. I'm gonna have to reinstall that. All right. So the Mag 7. Now, those tech stocks, no, those are where I have pretty much, as individual stocks that I've added into my portfolio, it's been predominantly that technology, those Mag 7 stocks, the things that we have all heard of and are familiar with it. And that's why I was saying, I I'm not opposed to doing anything. I'm not opposed to penny stocks, crypto. Um, I just I don't think that everyone needs to do it. Think that you need to incorporate into your portfolio what is right for you and what you are willing to put the work into doing the research and having a full understanding of. Um, and are you a person that wants to have to evaluate and rebalance your portfolio, or do you want a set it and forget it portfolio that pretty much if you didn't look at it for 5 years, you came back, you know that it would still be on track. Those dividends would have been getting reinvested, and it is something that is steadily growing over time. Now, you have to do what's right for you, but I want us all to be doing something in order to build up our wealth. So, back to the Mag 7. So those tech stocks, they really were thriving. And when you invest into certain mutual funds or ETFs, like a VOO, for example, they are very tech heavy because those tech stocks have the largest market cap, and so they are going to have the highest weighting in certain investments. So with that and the way that they were thriving over the last few years, that particular sector, um, we have to be ready for times like this when certain other sectors may be thriving more so than tech. Now, right now in 2025, the way that the things were going with those tech stocks in the last 2 years when they were soaring, fueled by AI boom with Nvidia and all of these different things. um, we have to be ready and be have our eyes open to what's currently going on in 2025. So Meta has been the only one that has truly been thriving so far. Up, I think, let me see. Let me just pull up Meta for a second. Meta year to date up 3.77%. But it's out of the Mag 7, it's the one it's done the best, um, as compared to, let's see, Nvidia. Nvidia year to date down 9.4%, for example. So even my Apple stock, you know, I've been investing into Apple, Microsoft, not as long as the others, but Amazon, Google, for some years now, little by little, dollar cost averaging. When I talk about these individual stocks, these are in my taxable accounts. These are in addition to my retirement accounts. So, and that's something else that you don't necessarily have to do. You don't necessarily have to have um, taxable accounts. You don't necessarily have to invest into individual stocks. I always like to share that message too. These are the things that I have chosen to do, but it might not be the right thing for everyone. And even if I'm talking about an individual stock, you can still, instead of focusing on building into a Microsoft or an Nvidia or something like that, you can then know if I'm saying something, you can try to tie it to your ETFs. I do definitely try to share about the ETFs that I have in my portfolio for retirement, as well as in my taxable accounts and my daughter's accounts across the board. But um, I just want everyone to know that there is an investment choice, an investment strategy that is right for them. Now I see Stock Brother is in the chat. Now this is the person to go to if you want to explore some penny stocks, which I have not done lately. But as I said, I'm not against anything as long as you go about it in the right way with the right knowledge and the right strategy in order to be able to be prosperous in what we are going about. So the AI seems to have cooled down, but um, I think it Nvidia is a stock that I'm holding on to for the long term, and um, I'm still holding on to my Tesla stock, even with the things that are going on with Elon and Trump and the EV tax credits and all of it. In time, I think that these things will settle down. I don't think that I'm going to ever be in a position where I'm going to be at a total loss when it comes to these particular investments. So I'm going to hold tight. I know Mike was on the live. He was a viewer chatting in the live last week, and he shared that he had sold his Tesla stock when he was up about 40%. Probably at one point he was up 100% like I was. But Tesla and Elon, I think that he still has things that we've seen with the robots, and he's not done yet, even with the vehicles, making them fully autonomous, perhaps getting them to be having, driverless buses and robo taxis. And I don't know what the future may hold when it comes to Tesla, but I know that he has big things ahead. And so not as large a position as my Apple or Amazon, but yeah, I'm going to be holding on to my Tesla for now. Um, because I'm not a like I said, I'm more of a long-term investor. I'm not a person that constantly wants to have to rebalance, but at the same time, you have to do what's right for you. Some of you might feel that I should have sold some of my Tesla or all of my Tesla when I was up 100%, but I didn't. And, uh, personal choice, because this is what it is. It's personal finance, personal choice. I'm just here sharing my journey. So, I think that's it for the stock market, like, overview of just trying to give a history and some definitions and knowledge of what I was able to pull together for today's live. If you weren't here from the beginning, I was talking about just touching on basically the last 20 something years. In 2008, what we went through at the beginning of COVID, what it was looking like in 2022, as well as what we're going through right now. Just make a plan that's right for you. But I would say if you have good sound investments, never be shaken out to sell them because of uh, short term volatility. Now, what amount of time short term is, I cannot tell you exactly what that is. But at the same time, I'm here to build wealth for the long term. So that is the big picture. Now, another thing I wanted to touch on today is I didn't get a chance to pull specific stats and statistics, but if you've been watching the news, I'm sure you've heard that, when I hear a story about a layoff, it's thousands of people. It's very significant. So I want to continue to encourage us to be ready for layoffs, be ready for, and what I mean by that is have our savings in place in order to sustain us during that time period. Because with certain industries being so heavily impacted, we may need to really have a strong cushion in order to help us to get through until we can find another job, maybe have to pivot to another industry. Um, it's just not the world that I wish we lived in, where when I was younger, I I I'm sure we all more so saw people go and work at the same company for 30, 35 years and retire. I have not been able to have that longevity. Is anyone in the chat been at their job over 20 years, with and wanted to stay there? I wanted, if it wasn't for being laid off multiple times now, I think I would still be at the same first company that I worked at, not in the same role. Obviously, I want to progress and move up in the company, and I did. I think while I was there, I might have had at least 7 or 8 roles. Um, but It's just not happening, and we have to have our eyes open to it. And with so many industries changing and not, um, and basically your job could be eliminated. Your job could be, you may have gone to school to learn something that is no longer needed because of AI and just everything that is changing in the world. So we have to be ready to pivot and always have another thing that we've talked about is having those multiple streams of income so that you're not completely dependent on that 9 to 5, especially when that is eliminated and it could take you potentially a long time to get to the next job. So, guys, I only see about 26 likes and 40 people. 40 over 40 people watching right now. So, can you hit the thumbs up? I'm trying to get to 100 thumbs up this week. Um, so, yes, you have to be I don't know what flexibility we need to have in this job market. I really don't know. Let's see. Joe, I saw Joe made a comment a second ago. Joe has been on her job for 24 years. That is awesome. I wish I could say the same. Uh, Thank you, Stock Brother, for giving the live a thumbs up. Zay, how old are you, Zay? Are you 15 or 16? You wish you can get a job? I know my daughter's ready for a job, a regular job too, but it'll be her first. And, it's hard to get that first job. And especially in this market right now where there are lots of people um, unemployed. So now back to what I was about to talk about when I got distracted talking about the layoffs and everything else. I was taking a look at this article and something else I just wanted to touch on. What's the title of the article? Okay, so amid stock market uncertainty, here are 3 ways to protect your money. So this article is not about investing, it's about saving, which is another element that I like to touch on. So still, I had an image that I wanted to use, but I don't have it ready because I was in a rush and didn't do it. But I'll have to I'll post it to my community wall because I want you guys to take a look. And I just want to continue to remind everyone the difference between saving at your local bank, saving in a high yield savings account, or some other options that I'm going to touch on, and investing. And they are drastically different. But I think that we need to um, focus on the high yield savings account as well as investing. I do have an account at my local bank, but I tell you, it's pretty much just for in and out, checking, pay the bills, nothing sitting there because it's not gaining any interest. It's not doing anything for me by being at that local bank. Now, guys, again, reminder, Joe is giving it to you. Please like, share, comment, subscribe if you are not already. Uh, so this article touches on long-term CDs. Now, I think I have maybe 2 CDs still that haven't matured, but this is a way that if you know you're going to have an upcoming something that you're going to need the money to tap into in, say, 18 months or something like this is a way of not necessarily investing the money, but getting it to grow at a higher rate than it would it in your high yield savings account or at your local bank, definitely, because the rates that I have gotten in my experience have for CDs have been slightly higher than my savings rate at my high yield savings in my high yield savings account. Now, I personally use Discover Bank, but there are many out there that you can take a look at, SoFi, Ally. Now, the difference is that they are online. They're not brick and mortar down the road. So you have to do your research, find out what you are comfortable with. But I would not be putting my hard earned money, significant amounts of money. I even have my business account in a high yield option in order to build money while I'm waiting for the opportunity to perhaps buy another property, and of course for repairs and renovations and things that I may need to do. So the point is that you need to do your research, do what you are comfortable with, make sure that you are with an insured, reputable uh, bank in order to do this. But you are leaving money on the table if you are saving for a particular thing, if you are planning for, just having your emergency fund sitting, um, you can be maximizing your money in that way. So CDs is something that I have incorporated, not as much as the regular high yield savings account, but I have done it from time to time because if I really felt like, say I had 5,000, if something was to come up, how much of that would I need immediately? So if there was a portion of it, say even 2,000 of it, I could move into a CD to get a slightly higher rate for the 12 months, 18 months, whatever amount of time frame. And then once it matures, I can pull it back out. And then I can decide, do I want to do another CD in order to continue, or do I need that money for something else? But that is something. And then I also do have a money market account, which has a slightly higher rate. But with the money market account, the option that I am using at Discover, it also had a higher starting balance. I think it was about $2,500. I might be wrong on that. I'm just saying these numbers off the top of my head, as opposed to the regular high yield savings account, which basically did not have a starting limit. So a money market account is something else. And I also have a physical card with my money market account. Now, that's something that I did with someone in order to, because I wanted the two of us to have access to this certain amount of money, this certain account as a joint account. So it's another way. But at the same time, I'm just making sure that every dollar that I have, every dollar that my daughter has, that I am doing my best to make sure to maximize it. Business accounts, money, every dollar that I am responsible for, I want it to be growing and thriving. So, what is they saying? How, oh, emergency fund. Okay, let's see. Let me take a quick look at the chat. So we were just talking about protecting our money during times of uncertainty. Yes, we need to be in. So another way, I did a video recently talking about, because of what we're going through in the tech stocks, what's been going on with them, you might want to consider other investments like that are not so tech heavy, if that is something that you want to focus on. But at the same time, like I've been saying, you have to know where you're at, what level of responsibility and research you want to put into your investments. Because if you add an investment into your portfolio now that is less tech heavy, is it something that you're going to want to hold on to in the future when things shift back to thriving in that particular sector? So I have a mix of different things like SCHD, but I also have a substantial amount into investments that track the S&P 500, like VOO and FXAIX. And then I have VTI, which is the total US stock market. But there is an investment that can give you exposure to all different types of things, whether you want international, whether you want a specific sector, which I wouldn't recommend if you're, not a person that wants to put in that particular work, because you may be disappointed in times like we're going through right now. If you had, for example, a majority or a high percentage into a sector like semiconductors that may not be thriving the way that it was when you started that investment. So, guys, make sure to give the live a thumbs up. Let me know if you have any questions. I'm pretty much at the end of my notes, so I'm going to stop in a second and take a look at the chat and see if you guys have any questions, comments, requests for any videos or lives that I might do in the future. But yeah, in these times with, like I said, with the layoffs and things that have been going on and with the economy, and the rate's still relatively high. We don't want to be burdened with credit card debt. We want to have a strong emergency fund in order to help us to ride out the downturns and not put us in the position where we are racking up credit card debt, where we are selling our assets, um, when the point of us adding them into our portfolio was for them to thrive and grow and build and be for us to use in the future at the time when we truly wanted to tap into them. So now I'm going to take a look at the chat. Thank you guys, everyone, for tuning in. If you're new here and you are not subscribed to the channel, consider subscribing. We talk all things finance, money, investing. I'm going to scroll back a little bit. Hi, Rick. Thank you for tuning in. Please know if I didn't acknowledge you specifically, it's just because I did not see your name. I know Joe has been out there greeting everyone. Thank you for that. I'm just taking a look back to see if there's any questions that I missed. David, if you were live on Thursday, I think I missed it. Blessed Life. I don't know if you're still here. Hello. Sledge. I don't know what David said, but Joe was agreeing with him. Okay, I don't see any questions. Let me come down. Oh, I was at the live? I'm telling David I missed his live, and he's telling me I was there. Okay. All the days are running into each other. Do I use a CPA for taxes? If so, how did you determine who to choose? Okay, yes, I do not do my own taxes. I think it was just recently. I just got it done. I just dropped off all of the information. So I have a business and it's an LLC. So I I don't have QuickBooks or anything fancy. I'm answering why not's question, by the way. Why not? I don't know if you're still here, but they were asking about do I use a CPA for taxes? So yeah, I do everything pretty manually, but she's able to uh, understand it. It's not my first year with her. I think this is going to be my third year using her. So I actually found her from another business owner associate of mine because I was my last accountant abruptly. He took a job um, for the government or he took a certain type of job where he was unable to do individual companies or people's taxes. And so he kind of had to drop me suddenly. And so I reached out to another friend that I knew that had a business. And I was kind of strapped for someone, and I went with her recommendation. I went and I spoke to the person, and actually, my accountant also is in real estate. So we had a conversation, and between the recommendation of the person that turned me on to her and the conversation that I had in that meeting, I decided to go on with her. And so we've been building a relationship, as I said. Now it's only been 2 or 3 years. Um, but she is, she's had I did my research on her and her associates. They have it's a three person partnership, and I've been doing well with them. But yeah, I do not attempt to do my own taxes or try to keep up with the tax laws, and especially now with the business and everything like that. It's not my expertise. So I seek assistance on that. But I am basically the bookkeeper when it comes to my household as well as for the business. As far as doing all of the tracking and the spending, and I'm not too good about that, guys. If there's something that I would need to work on, it is definitely because I left it all. I sometimes I the whole year passes and then I'm here looking for the receipt for the plumber and how many times did I have the snow removal and the lawn care, and I kind of have to pull all of those expenses together. And then, especially when I use the business credit card, it's then having to go through the credit card statements and figure out everything. But I got it done. It's all submitted and I'm working on it. But yes. Uh, Now, why are people getting laid off? There's lots of different reasons that people are getting laid off. Everything that's going on with the government, shifts in needs in different industries. Uh, but Zay, I know you're not even working yet. Okay. I am, let me see, Zay, I am, yeah, Zay, I think Zay is a young teenager, not even done with high school yet. So, Zay, what I was thinking to myself, and I'm going to use some examples that you might not want to even consider, but uh, going forward, when I was younger, I would say there was always become a teacher or a nurse or, something basic. I did not go that direction. I went towards finance, accounting, business administration is what my degrees are in. So, but, I see looking at where there are jobs openings today, healthcare and retail, not that retail is going to pay what some of the other industries are do, but even an optometrist, especially if you are in a state or an area where there are aging people, that is definitely something that is going to be needed. Um, and even working for a funeral home director, just there are basic needs out there. So when you are going to work on your career, if you are in a place where you are going to pivot into something different, if there is an opportunity to do it, if there is a short-term certificate or certification that you can get, think about the big picture, because as things shift with AI and technology, what are some industries that you can truly have longevity in that will always be needed? And the type of work that I've been doing over the last few years does not fall into that. Okay, taking a look back at the chat, my emergency fund. You have your sinking funds in a regular savings account, Eddie. Why? Why are the sinking funds in a regular account? Why can't they thrive and be in the high yield savings account? I don't know what the limit is, but I have several accounts at Discover because I have the accounts named with the specific things that they are for. I know some people just have everything together. You don't have to break it down as to this is Christmas and this is vacation and this is car repairs. But if you have that personal preference, you can do it that way. Um, all right, all right. Let's see. If you have just come into the live, please give me a thumbs up. Thank you, Red Star, for tuning in. Okay, so guys, I Nightbot has quit on me, but so I'm trying to remember to do my own station breaks. Uh, and so I'm going to take one now. I put out videos throughout the week. I don't have a definite schedule, but hit that notification bell so that you can keep up with all of my videos as well as live streams. And also, if you are not already, subscribe to the channel if you like what you are hearing today. And if you are ready to open a new account, I have my referral links for Webull and Moomoo in the description of all of my videos. Check that out. I also have referrals for Rakuten and other things that can help you in your investing journey and different ways to save money. So check those out also. And you can support the channel by becoming a channel member. So consider that. And if we don't have any other questions, I am going to wrap it up for today. Please, guys, let me know if you enjoyed this topic, what topics you might want to hear in the future. Let me know if you have any comments or questions related to what we've been talking about today. So, how does everyone go about their saving, investing, sinking funds? What are your favorite ETFs? What is your favorite way to go about investing? How what is in your retirement account? Is it a target date fund? Do you know the performance? Just throwing out some different questions. Because I want us to be thinking about our finances. I want us to be making sure that we are taking advantage and maximizing the opportunity that we have. I've been in the boat where I've been in failing investments. I've had my retirement account invested into something that I did not was not having a good performance, and there's no reason for retirement, especially. This is decades of building. You wanna make sure that you're keeping an eye on these things because we don't wanna turn around and now we're 65 and, really thinking about it and saying to yourself, "I could have had over $100,000 more if I was in a better investment." I don't want that to be anyone's story. And we really need to prioritize these things. I shared a video a few weeks ago. I think it was called One in Seven Retires Broke. This is not what I want for us. We need to just know about the big picture, know that um, on Social Security may not be enough. I just want to continue to have all of these different conversations because I want us to be able to not have the struggles um, of living off of $1,400 or $1,800 a month, for example. Think about that. Would that work for you, considering your expenses right now? Um, and we have to be ready for it. I have I had one of my best friends. She actually passed away a few years ago from COVID, but I have a couple of people in my life that either had to stop working very early, much earlier than they would have ever expected. I mean, in their 40s. And even I've had a family member that had to stop working very abruptly because of health concerns. So I've seen these things happen. And so we have to just be mindful of it and just be doing the best that we can because that day may come. You may think, oh, I'm going to be working for another 15, 20, 30 years, whatever. It may not work out like that. So I just want us to be working to put ourselves in the best financial place possible and um, be able to supplement what we will be getting from Social Security, maybe a pension, because it potentially, depending on your circumstances and how many people are living in your household and contributing to your bills, it may not be enough. So just want to touch on that. Thank you, Nora, for tuning in. And Miss V, let me know if you guys have any questions. Uh, But today we were going over, a little bit of history over the last 20 years. Can't definitely say what we are in for in 2025 because there are some elements to it that, we don't have that recent, we don't have any, I don't even want to say recent, not 10, 20 years, even much longer than that. We just don't have the history to reflect upon with the shift that the administration is taking with tariffs and what's going on with the crypto reserve and just different things that this administration is on board with and trying to shift to. But in time, like I was saying last week, I hope that things balance out so that perhaps there is a cut or something to our income tax, but it comes sooner than later if we are going to be having to pay higher prices for our goods due to this tariffs, potential, wars or conflicts that are created, and we're impacted financially in that way. I hope that the two things catch up to each other so that we're not putting ourselves in debt and any struggle for a long stretch of time, because I know the big picture of what their intentions are. If you're already wealthy, obviously it's easier for you to hold tight and deal with it because you're not struggling to pay the basic necessities. You're not as hugely impacted when, for example, I was sharing last week too that my electric bill is up 14%. So with those, a little percentage here and there on the internet for the house, and your oil change goes up, and because all the different things, your groceries, the gas for your car, when all of these things go up a little bit and your budget is already tight, you're obviously you're not getting raises in order to keep up with those type of increases across the board on many of the things that you have going on in your particular household. So it's just not, unless you are truly wealthy, you have a huge buffer, you're feeling it. And I hope that the administration realizes that there are more regular people out here, and we need the relief sooner than later. And obviously, I think across the US, it's a standard of 26 weeks for unemployment, with so many people being unemployed. I hope that potentially there could be some extensions to that in order to give people a time period in order to perhaps, like I was saying, go and if they have to shift to a different industry, go to school, change careers, give themselves an opportunity to do what they need to do in order to get back to being gainfully employed again and hopefully earning the same amount that they were before. And it's so hard being in that situation because there's so many elements to that, being laid off, because you're going to be questioned on to why is there gaps in your employment. And I would never say to someone like just get a job, because I know if you have a training and skills and a background in one thing, it's not that you could just walk into whatever business and say, I'm unemployed, I'm willing to do anything. They're not necessarily gonna even give you a second thought to giving you the opportunity because you have no background in it. They don't know if you're gonna stay. They're thinking, yeah, even if we do hire this person, they may as soon as they get the right fit, they'll be gone. They'll want to get someone that is truly interested, is truly in line with what they need. So it's a hard situation being out here. And, with the government's potential, disruption, government uh, uh, shutdowns, more layoffs. It's very nerve wracking what we are going through right now. But this is why I have been striving for many years now to be prepared as possible so that I'm not surprised and having to face any huge setbacks when we are going through all of this different turmoil in our finances and the economy. And, I didn't know that this would happen. I didn't expect what's going on with this tariffs and just rising prices and one egg costing about 50 cents each. But it is what it is. So, thank you guys for tuning in. I hope everyone has given the live a thumbs up, and I will see you next week. Thank you for tuning in. Make sure to leave me any comments, questions, suggestions for any topics that you would like me to cover on the live, as well as videos. And like I said, consider becoming a channel member. And I appreciate all of your support. And make sure if you do watch my videos, leave me a comment and let me know you were there. Give me a thumbs up, and I will see you next week. Stock it up, stock it up, stock it up, stock it up, stock it up.